Alright, guys, welcome. I am doing some technical analysis on Facebook and Square. I'm going to keep this short and sweet. I only do swing trading. I don't do long term trading. I don't do day trading. I've tried all of them. This is what works for me. And if it works for you too, then check it out. So it's my technical analysis on Facebook. I'm taking a swing trade on it. I actually got in yesterday. So Facebook is looking really, really good to me. Juicy for a good swing trade. Take a look. You look at this weekly chart. This is the weekly chart. It's a constant uptrend, okay? And as you can see, there have been minor pullbacks. So those white lines you see, these are pullbacks. I mean, I didn't draw all of them, but they are pullbacks. Now, Facebook rallied all the way up to 304, okay? This last, I think, like 2, 3 months ago, okay? And now it pulled all the way back to that moving average, that 20 moving average on the weekly chart, and rallied up again, bounced back, pulled towards the moving average. So essentially it's consolidating right now. And it's forming, as you can see, it's a flag, or it's like a symmetrical triangle. A lot of the times what happens with this kind of pattern is it pops. It chooses a direction to go. It has to go one direction, right? And there is more of a potential for it to go up than down. There's more upside because it's maintaining this moving average. It's maintaining this moving average on the weekly chart. So I honestly don't see it breaking this. There's obviously a possibility, but the chances are low, in my opinion. But you always still want to protect your capital, right? So as you can see, there's this ascending resistance plus the moving average and a descending resistance. Okay, so that's why I really like it. You go to the daily chart, you see the 100 SMA, I mean exponential moving average. All right, and a good buy spot would have been right here. Okay, 266. Okay, now I saw this stock late, but I still got in at around 277. Okay, now, and that's okay. That's okay. My typical strategy is an aggressive buy off of support, a strong support. Now, just because I got in at 277, it doesn't mean it's a bad thing. It just means that my risk to reward ratio is still good. I mean, I got in at, if it went to like 290 right away or 300, I wouldn't get into this. My risk to reward ratio is still good. Okay, so now again, the strategy is an aggressive buy off of support. I told you guys that this is a strong level of support. Now, what is a stop loss? So if you guys get in around 266, 277, or even 278, the stop loss would be a loss of this moving average. Okay, this is where the stop loss would be. I would not have my stop loss anywhere here. Okay, that's just not an ideal level. You want a strong area of support. So a loss of this moving average. Okay, now so we're going to use 260. Okay, you don't want to keep your stop loss too close to the low of this candle right here. Okay, the reason why is because a lot of times what happens is these institutional guys and all these hedge funds will tank this stock down, and they know a lot of people have sell orders here or stop losses, and knock out all the stop loss orders and then rally this stock back up. So, and then you're at a loss, and then the stock goes up, and what happens, right? It's just not good on your end. So I would keep it at 260 in case it does bounce, in case it does go back and test this level again, right? Now, so what potential does this have? I mean, there's all this support here. There's this descending resistance. There's a level here, right? Now, there is a lot of upside to this because of this pattern, right? And it is a potential, it is a good pattern. It's going to pop, like I said, and it has to choose one way to go, and there's more upside than down. Okay, this is the same thing that happened to Apple. It's already happened. If you guys go look at the chart, You see, once it breaks this descending resistance, it's going to 304. High possibility. So my strategy here is if I'm getting in at 277, which is what I got in at, okay, my stop loss is 260. That's $17 per share risk. Okay, it has potential to go to 304. Okay, so I'm going to take half off at 304. Okay, and I'm going to take the rest off at around 315, 320. That's kind of just letting it run. And if it goes back down, I just stop out at break even. Now, I only bought 35 shares. That's still a lot for me because, this is a beginner type of swing trading channel, and not everyone has a lot of capital, right? But I'm using this as an example. I only trade higher priced stocks, right? So that's it for Facebook. Now, SQ, as you can see, SQ is pulling back. Now, SQ's potential buy at 200. The reason I say that is you can see the trend line here. Okay, it is right here at 200. Okay, I'm using this trend line since about March. So a good dip buy would be around $200. Now, it could go all the way to 243. I am not going to chase this. If it doesn't hit the level I want to buy at, I'm not buying. It's that simple. You know what I mean? There's a million stocks. Oh, why don't you buy now? It's already dipped. What if it goes back up and you miss the opportunity? Okay, I missed the opportunity. I miss it. There's a million other stocks, right? You have to realize that you just have to follow your strategy to the T. To the T. You know what I mean? That's just how it is. And that is what it takes, right? So if it hits 203 and it's close and it doesn't hit the number I want, which is 200 or 201, I'm not taking it. You know what I mean? It's just what it is. Now, so SQ has a higher potential of going down to 200 and popping back up because 200 is a strong level of resistance from a psychological perspective and just in terms of these moving averages. But there is a potential it could go to, if you look at the weekly chart, again, it could go all the way and pull back to the moving average on the weekly chart, which is around 184. It's done that before this year. Okay, so that's why even buying at 200, there is potential for it to go more. There's a downside, but I think it's a lower chance. That's all I'm saying. So that's why I'm putting my stop loss at 180. Okay, this is a trailing stop loss. You guys have to understand this. It's a trailing stop loss because this moving average is going to keep curling up, right? So I'm just putting it a little below that moving average. I get it at 200. It's a $20 risk per share. I get 50 shares. Okay, so 50 shares at $20 risk per share. That's if I take my calculator out or whatever, that's a $1,000 risk. So if I'm wrong on this trade, I lose $1,000, and I'm okay with that. And that's what you guys have to understand. Like you have to calculate the amount of money you're okay with losing if this doesn't work, right? Now, if I'm right about this trade, is a I'm taking it off at least half at the 52-week high break. So you know, and then the rest is break even, and I just let it run potentially to 60. So there's a good chance. I do feel like in terms of SQ, there's a high potential for it to run and break that 52-week high. So automatically, what's happening here is I'm risking $1,000 to make 2,000 minimum, in the sense of $20 per share risk, and I'm going to take half off at 240. So that's a $40 per share gain. Now the rest is break even. So now that's why I really like this stock. SQs, keep it on your watch if it pulls back to that level. Now This is just my strategy. It's what works for me. It's what's been working for me. Um, and that's just how I trade. My accuracy is around 70%. And this is just what works for me. I don't chase. If it doesn't hit that level, I just don't buy, right? It's just, it is what it is. Um, so keep an eye out for SQ, guys. I have an alert out at 2:05. And yeah, that's about it. Enjoy your day, guys, and stay safe and trade responsibly.